Hi, Emily Farber with Levitt Craig Realtors in Iowa City, Iowa. Thanks for joining me today. Today is a video series I've started called Lunch with a Lender. I'm here with April Holden of Residential Mortgage Network, and we are going to be talking about a way first-time buyers can save some pretty serious money when they are looking at purchasing a home. Our topic today is the Mortgage Credit Certificate, the MCC.
So the Mortgage Credit Certificate program is a tax credit program for first-time homebuyers that allows them to take 50% of the mortgage interest they pay each year for the life of the loan, up to $2,000 a year as a tax credit on their federal income taxes. And that's a credit, not a deduction, so it's above the line and a dollar-for-dollar savings.
Check this out. Crab cakes in Iowa.
And they're really good.
We're brave. April, can you tell us who qualifies for an MCC credit?
I sure can. So the qualifications are income-based and vary based on what county you're living in. But the Johnson County income limit is $87,000 for 1 to 2 in the household, and it goes all the way up to $100,050 if they have 3+ in the household. And if it's a couple and only one person's going to be an unmarried couple and only one person's going to be on the loan, we only have to look at that one individual's income when we're calculating for this limit.
So even though this is billed as a low to moderate income program, it really doesn't feel like that when you talk about the numbers in that way.
It's pretty generous, yeah.
So is the MCC limited? Do funds run out?
So it is limited, as we were talking about from a qualification standpoint, to first-time homebuyers. So they can't have owned a home in the last 3 years as their primary residence. And the funding does technically run out, but so far they've been able to do quite a few, and funds are not. We're not really getting near to the end of that funding round. So as of right now, funds are looking good for people being able to have access to this program.
April, do all lenders offer the MCC program, or how does a buyer find out if that's something that they could use to their benefit?
So the program is administered through the Iowa Finance Authority. So you can go on their website and find a list of participating lenders. Residential Mortgage Network's obviously on there, but you do have to be a participating lender in this particular program. So there's some lender requirements that the Iowa Finance Authority has. So you can look on the website before you get pre-approved for a list, or you can ask your lender, me, if they are participating in this particular program.
Tell me a little bit more about the process of a buyer applying for the MCC credit.
So if you're working with a participating lender, there's really not a lot additional the buyer has to do. The lender will take care of it, but we basically need, instead of just 1 year of tax returns, we need the most recent 3 years to prove that that buyer hasn't been claiming any mortgage interest deductions for those previous 3 years. So not really a ton of work to do that way. There is an application fee. So right to the Iowa Finance Authority, there's a $500 application fee, but it's a one-time fee. So $500 to get $2,000, $2,000, $2,000, it's kind of worth it.
So you mentioned that there's a $500 application fee for the MCC. Are there any other hidden expenses that a buyer would want to know about?
There's a $500 application fee that they have to pay up front when we apply for the actual mortgage credit certificate to the Iowa Finance Authority. There's also a $250 fee that's just part of their closing costs that goes to the lender for processing the mortgage credit certificate for them.
So $750.
Yeah.
One time, that's it.
One time.
Okay.
Yeah.
So I'm interested about that note you made about 3 years of past income credit. We are talking about this like it is for first-time buyers, but what if somebody had owned a house several years ago, sold it for whatever reason, has been renting for 3 years, and is now ready to re-enter the home buyer market?
So we actually get that question a lot. So an example would be a couple that we had that had owned a home in another state and got relocated here for work purposes and couldn't sell that home. They had owned that home within the most recent 3 years, but had sold it about a year ago and hadn't lived in it for their primary residence. So in that case, they owned a home, but they still qualified with this program because it hadn't been their primary residence in the last 3 years. So another example being if you owned a home several years ago, sold it for whatever reason, and it had been at least 3 years since you'd taken that mortgage interest deduction, you're a first-time home buyer again.
Interesting. So the benefits of the MCC seem fairly obvious, April. Are there any negatives that we need to know about?
So I don't think that there are any negatives, but there are income limits like we talked about. So if you're real near the income limits and you know you're about to get a big promotion where you're going to be over income limits and you plan on selling before the 9 years is up, there is a 9-year recapture period. So if you're over income limits consistently after you get into it and you sell before 9 years is up and you have a significant gain on that sale, you could be subject to recapture. But the Iowa Finance Authority told us in our training that they've only really had that happen one time to someone in all the years they've been offering the program. So the chances of it happening are rare, but your lender should really do their due diligence and go through that with you and make sure that it's going to be the right program for you.
So when you say recapture, tell us a little bit more about what that means.
So recapture is when you do sell that property, you would be paying back some of that benefit that you've gotten.
Okay, and so that's a potential outcome if you sell before 9 years.
Yes, that's correct.
But you're telling us that you really don't see that happen very often.
No, and
even when people sell before 9 years.
Sell before 9 years, especially if the income limit's $87,000 and you currently make $50,000, and your income goes up a little bit every year, and you do have a gain on the sale, you're still not over income limits. So there's no recapture for you, even if you sell in 3 years.
So the potential for recapture really comes from people who've seen a significant increase in their income and they sell at a significant profit.
Yes, that's accurate.
All right, thanks, April. If you have any further questions about the MCC, April Holden at Residential Mortgage Network would love to talk to you. I will put her contact information down below in the description box. Thanks for joining us. As always, I put out videos every week about all things real estate, feature stories about the greater Iowa City area, and easy do-it-yourself projects, along with whatever other crazy stuff I decide to record. Catch you next time.
Thank you. I've got a huge bite.